Oil has officially found a floor and is primed for a massive reversal at any second. Even though oil pumped and faded yesterday, with Brent getting instantly rejected the second it tapped at 100 psychological level, do not get fake out thinking the rally is that. And on the contrary, this is a textbook secondary retest of support. The bulls are just coiling the spring for the next leg up. Let me hit you with the mind-blowing macro stat. In the paper futures market, Brent is chopping around 94, acting like everything is perfectly fine. But the physical spot market has gone absolutely parabolic. The 40s physical crude benchmark already reaped past 146 back on April 8th, and today it just squeezed even higher, nearly tapping 147 a barrel. What does this actually mean? It means real-world buyers are so desperate to secure physical barrels right now that they are paying a massive 50 premium over the paper futures price. This isn't trading anymore. This is a full-blown panic squeeze. Why are we seeing this historic arbitrage gap? The root cause is simple. Even though the US and Iran are paying lip service to a ceasefire transit through the Strait of Hormuz has only recovered to a pathetic 8% of normal capacity, refineries across Asia and Europe are staring down a barrel of mass supply disruptions, forcing them to blindly beat up physical barrels from the North Sea and Africa to absolute nosebleed levels. So the paper futures price you see right now is a severely lagging indicator. It's completely sedate by ceasefire hopium, making it incredibly easy for smart money to manipulate and flush. It completely fails to price in a literal bank run happening in the physical oil market right now. And we all know the golden rule. This massive disconnect between paper and physical is 100% unsustainable. The second, the athletic basin's inventory buffers during futures prices are going to violently snap back to match the physical spot price. When that happens, we are going to witness a face-ripping catch-up rally. Now look at the geopolitics. Do not bet on these talks bring instant peace. Sure, the first round of US-Iran talks kicks off tomorrow, but there's absolutely zero mutual trust between these two. The odds of any real substantive progress in round one are practically zero. The most likely macro scenario is a prolonged fight and talk stalemate. This lingering uncertainty means the geopolitical risk premium isn't going anywhere in the short term. The moment these talks hit a wall or collapse, oil is going to essentially reap higher testing and blowing right past that $100 psychological resistance. Going back to the tape, I'm looking at the EBC order flow tool, and Brent has a massive floor of support right around 94. It tested that level multiple times intraday without breaking. So even though we faded yesterday, it looks exactly like smart money shaking out the weekends. But for your bulls out there, keep your head on us. We have CPI data dropping, and the second that brings heat, violent Dartmoor weeks. Hunting stop losses are standard operating procedure. For my personal trading setup, I am not going to be an idiot and leave my hard stop sitting right at the run number like 94. That is just asking to get weak out by a stop hunt. If you're looking for an entry, widen your invalidation level or just sit on your hands until the data prints and the true direct reveals itself. Bottom line, do not get freaked out by yesterday pump and fade. The nosebleed prices in the physical market, the ongoing chokehold, and the extreme fragility of these geopolitical talks are all calling up massive, explosive upside momentum for oil. And as always, this is just my personal macro analysis, not financial advice. Again, shout out to EBC Financial Group for sponsoring the content.